Okay, everyone, so this is part two of my pound yen trade that I'm recording a recap on for Cam White and Trading the Probabilities, his Facebook group. So in the first video, I gave kind of my top-down analysis on this trade. If you haven't watched that, go ahead and check it out. It's on, my YouTube channel. You can find it. I think I'm going to name it like Evolution of 1,000 pip trade because currently right now that's I have over 700 pips closed profit on this trade idea, and my stop loss for my last position open on this is trailed around 260 some odd pips. I have a little over 1,000 pips, or right around 1,000 pips locked in on this trade. Floating pip count is just under 600 pips on my last position size, or on my last position open on this trade. So let's go into the second wave of entries here. In the first video, I went over these blue entries here. You can see on my screen, on the right side of my screen, my entry 1 and entry 2, where I exited and why I was taken out of the. But I want to talk about, so just for to keep my charts clean, I'm going to delete those entries. Again, if you haven't watched the first part of the video, go ahead and check that out. It'll talk about those first entries, but we're going to talk about the second wave of my trade here and why I entered where I did. So you can see these are our daily levels from the first part of the video. You can go back and check those out, where I got those from and why. But this, this is our daily trend line, and this line here is our channel bottom that had a nice intersecting point at a demand zone there from higher time frame charts. Nice impulsive move off of that, and the first part of my positions, the first trades that I took on this, I got trail stopped out. I took profit on part of it, and then the second part I got trail stopped out once price broke back down below this wick here. But as price traded back down into some of this previous structure here, I'm just going to highlight this and explain why I went ahead and re-entered where I did. So we got this little consolidation area here before our second little impulsive move up out of these daily levels. And I found it quite interesting that sellers were pretty aggressive here, and even the first part of this hourly candle here, but were pretty much stopped dead in their tracks. And that happened right around, I don't want to call this a demand zone, but you can kind of consider it a little pause in the market before the next explosive move. So you may consider it a demand zone or what. I typically take demand zones and supply zones off of higher time frames. You can see in the first video I got a major demand zone off of our monthly chart for this chart, pound yen. So yeah, so it's just kind of a zone of interest that I saw stopped sellers dead in their tracks and put in a large bullish candle immediately after that, meaning that sellers were stopped and buyers entered the market right around this area. And I found that interesting, especially considering where we were coming off of this these daily levels here. Again, we have our daily demand zone, our daily trend line, channel bottom, all that right around here. So as this bullish candle closed and retraced just a hair, I went ahead and entered at market. I have a couple different reasons for that, but I won't go into my specific entry techniques for that here, but that was my first entry there. This entry number 3 was my first entry on this second wave of entries here for this trade. That pretty much didn't go anywhere. Stop wise for all three of my entries was right around, well, not there. I don't remember exactly where it was, but it was right around 139.10-ish. Essentially the low of this candle. You know, we have this little zone of interest that I had marked there, but it was essentially right below, you know, this wick. I felt that was a pretty important candlestick that happened right there in rejection off of this little lower level. And I felt if this wick didn't hold, price would definitely make its way back down to the daily trend line and potentially break, you know. So I wanted to be out of the trade completely on all three of these positions and reevaluate the trade at that point in time. So you can see my first entry here at this purple 139.68. That was a market entry. All three of these were at market. A little bit more analysis went into my second entries, and that was, I'll leave that there as my stop. I believe it was just a couple pips below that wick. We'll just call it 139.08 because that was right around where it was at, just below that wick there. So a little bit more analysis went into my second entries because those were a little bit more involved once I saw price just kind of stalling there after my first initial entry. So this little impulse move off of our daily levels came back down. That wick spiked right down into this little zone I had marked there and the 78.6 fib retracement. So that was kind of my first Fibonacci level here. For my second entries, I had that on my chart, and once we traded back up into some of this structure here, I drew another fib, and right around the 61.8 of this little impulse move was the 50% retracement, as well as a nice little structure level here, previous support level that had acted as support, and once it was broken it acted as resistance here, and a little bit here before it was broken again. So I left that on my chart, and that was my third entry at 139.50, just as price was kind of spiking down, testing those entries or those levels. Again, price was, or my stop was the same, 139.08-ish, down below this low wick here for my second entry. And my third and final entry on this trade was based off of this little trend line I had marked here, and some of these little levels down here I had marked that had caused price to stall. And right around there was the 78.6 fib retracement of this tiny little move here. And it had started forming a little trend line there based off of our daily lows here, or our daily levels that were tested, and then this little spike down. I was anticipating a potential third test of that, which lined up nicely with these other little levels of confluence. Target wise, because I had about 60 pips of risk on my first target, or my first entry, which was this 139.68-ish entry. You know, I always want to get at least a 1-to-1. So you can see my stop loss was right down, you know, about 60 pips. So I wanted to take off 60 pips of profit initially, just to make it a risk-free trade. And that lined up pretty nicely with this tiny little extension profit target, if you want to call it that. And it also lined up pretty nicely with a nice little shelf of support, previous support. And then, we had our kind of our more exaggerated trend line here that I had drew in on the 1 hour chart. So right there was where I took profit, manual exit. I took profit right there as price was spiking up into those levels. And I moved my stop loss into profit, or just slightly above break even for the other two positions. The other position I took profit at was essentially this. Let's see, that was entry 3. Entry 4 was kind of this little trend line here. It was another structure level, and had some little, minor little structure levels here from back here. So that was where I took profit on that second part. The first one was for 60 pips, simple 1-to-1. Second one was for a little over 100 pips on that second point there. Sorry if this is getting a little cluttered. It's kind of looking a little messy, but you can imagine if I had a bunch of indicators on here how much more cluttered everything would look. But and then I just simply trailed on structure. I just let the market kind of do its thing. I had my stop loss in profit for the last point of my my last entry here, down here, for the reasons that I listed there. So that stop loss was just slightly into profit, just to cover fees, and I just let the market kind of do its thing. And once we consolidated, once we broke above this more, well, this is our channel top. Once we broke above this channel top and retested there, I was in this trade for a couple days, the last position here. We were consolidating, and as price spiked up above these highs, I moved my stop loss for this 139.29.5 entry all around here or so. I believe it was. Let me see here. My entry 5 exit was for 236 pips. Yeah, just up into this structure level. I got kind of caught in this little fake out here. So it was just kind of up around this little spike low here. I got caught in that fake out, and it dropped and kicked me out for 236 pips on that portion of my trade. So that was kind of wave 2. We're kind of taking up some extra time here on that explanation. So I'm going to go ahead and stop it here, and then do a third part of this video for my last entries here, these yellow ones. And I'm still in my entry number 7 here, and I'll explain why I entered where I did there, and where I'm currently trailing my stop, and all that, based off of the last remaining position for this 1,000 pip trade.